Hey guys, welcome to another video. Today we got some educational content for you guys. Let's stop wasting your time and let's just kind of get into this because, like I said, I don't want to waste you guys' time and I want you guys to genuinely learn from this video and not this video to be obsessively long for absolutely no reason. So I'm just gonna get started and we'll see where this takes us. So first and foremost, we're talking about area of interest. What is area of interest? Area of interest is an area where when price action is below the area of interest you want to sell, when it's above the area of interest you want to buy. And the area of interest can be levels of where you can buy or sell to then take it to different levels that you have graphed out on your charts. So this is primarily area of interest, what we're going to be going over. If you guys want to see a video on resistance and support, just leave a comment down below. I could do that as well. But like I said, we're just focusing on area of interest, so don't get too confused. Just focus on what area of interest is. Okay, so let's take a look at the charts, right? As you can see, let's go to our first one. Okay, so down here, we have an area of interest down here, which obviously I found on the weekly. You can see price hits and goes down, price hits and goes down. Then we come back up, price comes back, retests, hits, and we go up, right? Comes back down, does whatever, comes back and tests again, right? This is only on the weekly, so we can find it multiple different times. Hits, bounces, hits, bounces, comes back down, hits, bounces, hits, bounces, hits, bounces. So what I look for at area of interest is we need multiple hits from the future, right? It doesn't really need a specific amount, but I would say at least 3 or more touches, and it'd be a pretty good area of interest. I like finding all of my area of interest on the weekly, daily, and 4-hour. Then we can go down to the smaller time frames. It's a lot more reliable finding your area of interest based off of the higher time frames rather than going to the 30-minute whatever and trying to find them there. I do support and resistance off of those smaller time frames most of the time, but yet again, that works for me. Other things can work for you, I don't know, but that's just what works for me. Okay, so obviously let's take a look at this. We have this area of interest. We clearly bounce off of it and continue moving to the upside. So how do you trade off of one of these? Well, there's multiple ways. You could sit here, wait on the 4-hour and wait for a bullish engulfing to then take it off of that area of interest, right? And then have the low or have the stop loss below that low, take profit at different areas, right? Areas of support and resistance or other areas of interest on the chart, right? So as you can see right here, our entry on this 4-hour time frame wouldn't be until over here, right? Because how I take trades is I like looking at candlesticks and having candlestick patterns, right? So right here would be a bullish variation pattern because it took multiple candlesticks to then finally close above this one red candlestick. If we had one candlestick close above it, that one red candlestick, then that's a bullish engulfing and we'd take that trade because it's a high probability. But this is a bullish variation. Okay, so you'd have a stop loss below here. Then obviously you wouldn't target this area of interest. You'd have to go target this area of support up here. And it'd be a 2.47 on the 4-hour. Here's an alternative thing you can do though, right? So instead of doing that and waiting a lot longer for that trade, since this red candlestick's so long, usually if it's not as big of a red candlestick, or let's say we had a very small other red candlestick and then a bullish engulfing, I'd take that because then obviously our probability is a lot higher, risk reward's a lot higher. But if we go down to the 30-minute down here, and let's go see where that was, right here, right? Down here is where it was on the 4-hour. Now we're on the 30-minute. We have somewhat of a double bottom. We kind of went a little bit lower on this double bottom, but we still had that double bottom, right? So for example, we hit this and we bounced, right? You see this red candlestick and we see this huge candlestick to the upside, which is a bullish engulfing. So I would take that trade, right, at 1 or 2% because this is a little bit higher probability since our 4-hour is in touch with everything else. We would go based off that and we could just target this area of interest up here and bang, look at that, it'd be a 3. It'd be a 1 to 3 risk to reward, just as simple as that, right? So there's multiple different ways you can do this, right? But one thing I could tell you that I've seen that does not work for me is trying to trade, let's just say the 30-minute time frame and targeting 4-hour targets, right? So obviously, yes, this is an area of interest that I found on the 4-hour, right? Yeah, this is an area of interest I found on the 4-hour, but you have to understand this is the 4-hour time frame, right? This is also the 4-hour time frame. So what you have to realize is that there's trends inside of trends in the market, right? And there can be, let's just say I entered where I showed you guys on the 30-minute, and instead of targeting here, I targeted here, which was my take profit on the 4-hour. Let's say I targeted there. It'd be a lot better risk to reward, but it'd be a lot bigger of a chance that price moves a little bit more and stops me out, rather than what my entry would have been on the 4-hour, not even having this pullback and going directly in my favor, right? So when you're trading on the 30-minute, you want to be targeting the 30-minute confluences, right? Or the 30-minute resistance or support areas, or highs or lows. You know, if there's no area of interest or support and resistance of any sort anywhere close, then you either have to find highs or lows of that 30-minute, or you have to find support or resistance of that 30-minute, which that's what I regularly look for, is support and resistance on the 30-minute, since I also actively trade that. Essentially, all I'm really saying is areas of interest that are on the 4-hour, on the 30-minute, right? You can use that as an entry, or then still take your price, still take your same stop loss and take profit as the 4-hour, just your entry off the 30-minute to get a little bit of a snipe entry. But you also have to understand that's a lot more risky, right? And what I've been doing is I just take my trades on the 4 hours, or I go down to the 30-minute and look for different areas of support and resistance. In this case, I would have just used this area of interest because it was close enough for take profits. Yeah, that's basically what you're looking for. Okay, now I'm going to quickly go in to how you find these areas of interest on the chart, right? Or how I find them. So first and foremost, what I do is I go on the weekly, the daily, and the 4-hour before I do anything, and I type down right here, as you can see, what they are, bullish or bearish, right? And you want all 3 time frames to be correlated together, right? You want them all to be bullish or all to be bearish, because if they're not all time correlated together, then you're going to have a little bit less probability in the trades you take. But for example, if it's 2 bullish and 1 bearish, you want to go for that bullish take, right? Overall, if it's all 3 bullish, then you have a high probability that we're going to continue seeing higher highs, right? Or we can ride a degenerate trade and go against the trend and take, you know, like a day trade to the downside, because there's got to be higher highs and higher lows. So, you know, you can go against the trend at all as well, but I would suggest if you're going against the trend, do that on smaller time frames. Don't do that on the bigger time frames. But that's good for area of interest, because I look for my area of interest where a pullback would be, to then have a good buying opportunity to then keep going up, and vice versa for selling, right? So let's just quickly go into this. Like I said, all bullish on all time frames. Okay, so we're looking for some buys, right? So what area on this weekly looks pretty decent? That would be an area of interest that has gotten touched multiple times. It's gonna be harder because we're seeing highs right now. There's not too much price action over here, because if I look over here, that's not too many touches. I guess this potentially could be one too. So this is what I do. I go on the weekly and I look at potential areas of interest, right? And I line them out. Okay, so now what I'm gonna do is I'm gonna go down to the daily and I'm gonna see how price reacted on the daily to these areas of interest, or potential areas of interest. So we have a tap here, move to the downside, come back up here, we come up, and then we spike off of it a little bit. You can see this consolidation right here at this area of interest, to then before it spiked back up. Now let's see this one down here, below it, above, never really retraced back, consolidation through there, tap down. This one got tapped, came back down, came through a little bit and spiked up. So let's just say these are our 2 areas of interest for this. There's a lot better of examples. This is just hard because it's all-time highs and look at how consolidated we are. But I guess I would consider this an area of interest down here because of this consolidation, and because we're not moving away from this area of interest. We finally broke above it. So we definitely could end up coming right back down, touching that again, and going for highs. This could be a minor area of interest, right? So the difference between area of interest and a minor area of interest. Minor area of interest isn't as deep in time, right? So like if we go back to this weekly, when's the first time we saw this touch, right? It was August of 2023. Okay, that was a long time ago, right? That got formed a very long time ago. So it's going to have a lot more relevance to liquidity and when we come back and touch that, right? So, and back here, this was October of 2024 was the touch on this. Still an area of interest, but it's a minor area of interest. I still treat it like one, but you just got to understand it's not as deep. So let's just go through this minor area of interest. So what I would do after finding that, right, I would go label it. Obviously, you want to know what you're looking at. So minor area of interest. I'd label the other one just area of interest. Square here, bang. So basically what I do here is I find a candlestick like this. You see the wick? I just kind of highlight one of them, whichever one's closest. So then it's not too big of an area of interest and we have a genuine, because these are boxes, right? These are areas of interest. They're not just lines. But yeah, so now since we have that, so what we can be expecting is this push to the downside and bounce back up, right? But we have to find a bullish entry once we hit that area of interest, because we can still do something like this. It can keep pushing down, and guess what? This is when area of interest to area of interest is good shit, because we can come back down, we can break it, we can retest that area of interest, look for some sells or some sell entries, and then ride it down to this area of interest down here, right? So you can use this in multiple different ways. Also, you have to keep in mind, look at over here, right? We're all bullish, so we'd be going against the trend on this. It'd probably change, because once we break below this point right here, the 4 hour then will be bearish, but still, we'd still be going against the overall trend, so you have to understand that. But yet again, you can use these areas of interest pretty good, and then you mix that in with support and resistance. It's deadly, man. It's really deadly. I've been making quite a bit. I've been forex trading for about a year now, and I've already passed a funded, my first try. I have yet to fail a funded. So, and that's just been the last couple of months. I've been really struggling in the beginning, but then I found this strategy. I use area of interest, support, resistance, stuff like that, and I've been actually doing really well. Risk management been on point. But that's enough yapping. I'm not just going to keep boring the shit out of you guys. So if you guys have any questions whatsoever about area of interest, please let me know. And please make sure to hit that like button and subscribe. It means the world to me. And if you want more educational content, but don't only comment in the comment section what else you want me to go over. Because I like doing this educational content and I want you guys to learn, super simple strategies like I trade. So hope you guys enjoy videos like these, and yeah, I'll see you guys really soon. Hope you guys have a great day, and I'll see you guys soon.